Hello family, thank you for tuning in. Look, in this video today, what I'm going to be doing is breaking down the top performing suburbs across Cairns for the 2023 to 2024 year. And we're going to really look at and break down what suburbs have done well in terms of their median house price growth for that period and what suburbs have done well for their median rental growth over that period. So we're going to look at the top 10 performing suburbs across those two data points, median house price growth and median rental growth. So I suppose if you are an investor, this is going to be very insightful to give you some good context around what suburbs are going through tremendous growth cycles at the moment in terms of house price growth and in terms of rental price growth. So I think if you're an investor, stick around. This is the ideal video for you. Cheers, guys. All right, before we dive in, I'm just going to give a bit of a plug to the business here. So for those that don't know me, my name is Troy Simbassini. I am the owner and head of research of Tropical Life Buyers Agency. We've been around for the last 5 years now, and it is one of our subsidiary brands under the Life umbrella, which I also founded as well. So we service the tropical North Queensland region, provide buyers agency services for home buyers and investors looking to buy real estate in this market. So we're very abreast to what's going on in the area, and we put this content out just to help those that are buying in the area not make the mistakes that we see many people make when buying real estate here. But if you feel as though you need help or you're struggling to buy, you want to lean on some local knowledge, feel free to reach out to me and the team also. We've bought more than $200 million worth of residential and commercial real estate in the area. So very familiar with what's going on and have a really good network to connect you with some really good opportunities immediately. So you can find us on that website, give us a call on that number, check out our socials if you want more information. Thank you, guys. We're going to go in and have a look at what are the top performing suburbs from a median house price point of view in Cairns over the last 12 months. So what I want to do is go in and look at the top three and then speak to why I think the top three are on that list, and then go through and break down the rest of the list also and try and provide some insight as to why they're on the list and how they're likely to perform in 2024. So we can see here that Bentley Park is the top performing suburb in Cairns, and over the last 12 months it's increased by 7.9%. So if we move over here to the third column, we can see here that year one, Bentley Park 7.9%. And that's followed by Edmonton at 6.4, followed by Palm Cove at 6.2, followed by Mount Sheridan at 6.1, followed by Smithfield at 5.5, followed by Clifton Beach at 5, Kawara Beach at 4.7, Cairns North at 4.7, Trinity Park at 4.6, and Edge Hill at 4.2%. So, wow, Bentley Park. Who would have thought Bentley Park would be leading the charge? I've got a couple of reasons as to why I think Bentley Park has performed so well over the last 12 months. The first one being Bentley Park is still a very affordable suburb relative to a lot of the other suburbs across Cairns that are very similar in nature in terms of have the sort of the same location benefits, the same amenity benefits, and the same stock quality. So you can see here Bentley Park has a median house price of only 537, and actually if you cross-reference that to the rest of the list, it's still very cheap when you compare it to places like Smithfield at 676, places like Clifton Beach at 982, places like Kawara Beach at 717,000, places like Trinity Park and Edge Hill in the 800s. So Bentley Park is one of the more affordable suburbs in Cairns, and I think it's having a really good run because I think it's still appealing to a really good broad section of the marketplace, a lot of the first home buyers and a lot of those buyers that are playing in that affordable price bracket at the moment. And obviously that's a large portion of the marketplace, and that's causing a lot of the demand there in the area, and it's obviously having an effect on the house prices moving up over time there over the last 12 months. And we can see here that over the last 12 months it's done 7.9, but over the last 3 years it's done 4.1, 41.4 actually, not 4.1. Over the last 5 years it's done 60%, and over the last 10 years it's done 65%. So it's certainly a market that's been rising over time, and it's really got quite aggressive in the last 12 months in terms of, well, the last, I'd say, 5 years in terms of its overall price appreciation. It's increased, the best part of 60% prior to, 5 years ago. It really only grown by 5%. As you can see here, it's got a total of 65% over a 10-year period, but over the last 5 years, 60%. So really, it's done a bulk of its growth over the last 5 years. So the last 5 years, I think, from an entry point of view, has been the best time to get into this marketplace. So look, guys, affordability, I think, was the number one factor. Number two, I think the reason why Bentley Park is up there as well, I think it's still very good value in terms of the stock that you can get there as well, relative to what you can get into other suburbs. So not only is the price point good, Bentley Park has a lot of good quality stock. So the 4-bedroom, 2-bathroom houses there are still on nice, decent sized blocks, around 600 to 800 square meters, and majority of them are Besser block homes or rendered brick. So they're very good finishes as well. So you're getting pretty good bang for buck there as well. So in addition to that affordability, what you're also getting for your money is quite good in terms of the type of dwelling or end product you're getting. And if you actually look at, I suppose, the high end of Bentley Park, so Bentley Park even has pockets and properties that sell for close to $1 million, and a lot of the sales in Bentley Park are also around that $700,000 to $800,000 price point, particularly the houses that flank sort of the Timberlea area, the Upper Roberts Road area, where it sort of borderlines Bentley Park and Mount Sheridan. That clustering of properties up there, all quite nice homes and sell for the upper end of the market as well. So Bentley Park has a good cross section of stock, and that means that there's a cross section of demographic there as well. So you got the people playing in the affordable end of the market, but also people with a bit more cash that can go into these other pockets within Bentley Park, because it has that stock quality that caters to not only the lower end of the market, but the middle end of the market, I like to say, between that sort of $600,000 to $900,000 price point. But obviously, a bulk of the sales are sub 600, and obviously that median house price is being dragged down by a lot of the sub $600,000 sales. There's not many properties that transact and sell above sort of 700 to drag that median up over time. So yeah, you got affordability, then you got stock quality / value for money. Number three, I think the location's pretty good as well. So Bentley Park, it'll be 15 minutes to the CBD as a crow flies, and it's surrounded by some really good public amenity. Obviously, the Mount Sheridan Shopping Centre is not too far from there. You got the Bentley Park College, you got the Trinity Anglican School, TAS, very close by there as well. So it really good sort of location that appeals to that family market as well. You're not too far from the city, and you're not too far from some good public amenity there as well. And if you want to get to the south side, to Gordonvale and Babinda, the Atherton Tablelands region, you're on the main highway there straight away, and you're southbound within the next within sort of 5 to 10 minutes from the Bentley Park suburb. It'll take you probably about half an hour, 40 minutes probably to get to the northern beaches, so it's not necessarily a desirable place to be if you want to be close to the beach. But yeah, a lot of the people that are buying in Bentley Park don't really care about that commute to the beach. Majority of those people probably aren't interested in going to the northern beaches. If they are, they're willing to make that commute. But I think a lot of the people will be swimming maybe at places like Goldsboro Valley, places like Bahana Gorge, or places like Harvey's Creek. They'd be spending a lot more time on the south side of Cairns as opposed to going to the northern beaches or Port Douglas. And the last point, I think, why Bentley Park has done so well, guys, is it's actually very good in terms of flood risk. So during Cyclone Jasper, in fact, Bentley Park wasn't affected at all. So it's been quite well buffered by previous flood events, and over the years it's never flooded at all. So it's very appealing for a lot of people that want to be away from the flood affected areas of Cairns. Basically, that whole south corridor of Cairns was not flood affected at all when Cairns was going through that Cyclone Jasper period, and the place got hammered there. But Bentley Park was bone dry, and people were not affected there at all. I think people didn't even lose power in Bentley Park at the time, from memory. So very good from that point of view, guys, as a location because it doesn't flood, and that's obviously very appealing to a lot of people, home buyers as well as investors as well. So investors are going into places like this because of the affordability price point, but because these locations and areas that don't flood. There's no major rivers or creeks that sort of snake through the suburb of Bentley Park to create, a bit of a flood risk there. So those are my 4 reasons why I think prices are moving very fast there. Going back to affordability, location / public amenities, stock quality, and also there is no flood risk. So I think that's why Bentley Park has performed so well. You can see these others on the list here. You got Edmonton, you got Mount Sheridan, you got Palm Cove. Um, just for me to sort of speak to this list real quick, there's actually a good clustering of Southside suburbs here. So Edmonton, which is second on the list, it's actually neighbours Bentley Park, and so does Mount Sheridan. So Edmonton sits on the south side of Bentley Park, and Mount Sheridan sits on the north side of Bentley Park, and Bentley Park sort of wedged right in between them. So we have this clustering of suburbs there that have been very popular over the last 12 months. Prices have really pushed up, and I think Edmonton as well as Mount Sheridan have the same sort of key things I just mentioned that Bentley Park has as well, in addition to that investor appeal as well, because that lower price point of that sort of sub $600,000 market, a lot of investors can still get into that market and have positive or neutrally geared properties as well, and that's why they've also been very popular. So there's a clustering of Southside suburbs here, and then there's a lot of Northern Beaches suburbs made up on this list as well. So you got Palm Cove, you got Clifton Beach, Kawara Beach, Trinity Park, Edge Hill. I'd probably say most of those areas are just your standard blue chip areas that have a really good track record of rising each year at a small percentage, and then obviously some years prices have increased more aggressively, but those suburbs incrementally grow each year, and it's no surprise to see them on the list. Palm Cove's just generally your most popular suburbs, probably been the best performer over the last 15 years, and it's no surprise to still see it on the list here. And look at its median house price of 1.1. I like to say that even at 1.1 million, people will go, oh, it's very expensive for a Cairns suburb, but in fact, when you start to compare what Palm Cove has to offer, when compared and contrast to, let's say, places like Sydney, Melbourne, Gold Coast, Sunshine Coast, the bang for buck you can get there for 1.1 million would be far greater than what you could get on the Sunshine Coast, Brisbane, Sydney, or Melbourne for the same money. So that's why places like Palm Cove still, I think, have the ability to push up over time. So look, guys, that's sort of a breakdown of the top 10 list here. A good cross section of suburbs on that list, but basically dominated there, the top 5 by the south side of Cairns. I think the south side of Cairns has a lot of upside potential going forward. It's a huge growth corridor of Cairns as well, so a lot of new development happening there, a lot of public infrastructure going into building out that south side of Cairns. And actually, if you do look at Cairns like from a bird's eye point of view, that's basically the only place the urban sprawl can continue to expand is south, because everywhere else is either floodplain or everywhere else has been completely built out and flanked by mountain ranges. So Cairns is running out of land very fast, and the only place the town or the city can expand now is south. So I think that south side area's got a lot of upside potential going forward. Lastly, these suburbs have done really well over the last 12 months. How they've done over the first quarter, so we can see here that despite them doing really well last year, you can see over the last quarter they were also all in green here as well. So the first quarter of 2024, we can see here that Bentley Park has done 1.5%, Edmonton has done 1.5%, Palm Cove 2%, Mount Sheridan 1.5%, Midfield 1.4%, Clifton Beach 1.4%, Kawara Beach 1.7%, Cairns North 1.7%, Trinity Park 1.7%, and Edge Hill 1.4%. So if we were to just maybe extrapolate that out and use that as a bit of a base, I'd probably say all these markets here are on track to do sort of above 5% this year in Cairns. So if you are investing or home buying, I think the sooner you can get in, the better, because you can capitalize on that upside that it's going to come with these suburbs in 2024. Okay, now looking at the rental side of the market in terms of what suburbs have had the highest median rental growth over the last 12 months in Cairns. So we've got the top 10 list here and we'll go through each suburb one by one. So we can see here that Parramatta Park is the top performing suburb in Cairns over the last 12 months, with its median rental price increasing by 11.7%. Okay, so we can see here over at 1/Y, year one, Parramatta Park at 11.7. So basically outperforming the market there by the best part of, I'd say 1.5% roughly, which is second to Mount Peter, which came in at second place, sorry. Palm Cove at 9.4, Gordonvale at 8.8, Kawara Beach at 8.4, Smithfield at 8.1, Bayview Heights at 8.1, Caravonica at 8.2, and White Rock at 6.8, and Edmonton at 6.6. So, wow, Parramatta Park. Who would have thought Parramatta Park would have had the highest median rental growth over the last 12 months? Given the nature of the suburb, like I wouldn't have picked it. But if you actually look at it, so Parramatta Park has a median rental price now of $570 per week. So if you actually look at that growth rate of 11.7, that was basically around a $60 increase. So at the start of last year, or around this time last year, sorry, in 2023, Parramatta Park's median rent was around that sort of $520 mark, and now it's virtually jumped $50 to $60 over a 12-month period. But it was coming off a relatively low base as well, so it was one of the more affordable rental suburbs when it came to median rents across Cairns. In more recent times. And if you actually look at this list here, what is it? It'd probably be, if you were to rank these median rents, I'd probably say this would sit maybe number 5 on the list, or 6 if you were to rank it in terms of how the highest median rents. So Parramatta Park is just one of those suburbs I think that's come off a low base, hence it's had such a huge increase over the last 12 months. Well, if we can see here, over the last 3 years, the rents have increased by 30%. Over the last 5 years, 37%. And over the last 10 years, 65%. So it's definitely a rental market that has been increasing over time. And if we actually looked at it from I suppose overall rental growth rate, it's done quite well over the last 10 years as well. Probably the highest median growth rate over the last 10 years when compared to this top 10 list right now. Obviously, this is not every suburb in Cairns, but when you compare it to this list, which has some pretty good suburbs on it, it's actually done quite well in terms of its long-term median rental growth. So that's Parramatta Park. The reason why, as I said, I think it's grown so much is it's come off a relatively low base, and it's really pushed up now into that sort of high $500 mark. And if you are investing, the median house price to get into Parramatta Park is around that sort of $700,000 to $800,000 mark. So if you look at it from a rental yield point of view, like the average rent in the area of $570, and you're getting in for around that $700 to $800, you're looking more around sort of a 4% yield. So it's probably not the best place to invest if you are looking for attractive yields, even though it's had some really high median house price growth. But that's again the median house price of the whole suburb. There are still some opportunities I know of in Parramatta that would sell below $750 or $600, even around that sort of $550, maybe $600,000 mark. I think you can still get older established properties there, and that might give you the ability to get you a higher yield if you are planning on investing in an area like Parramatta. So Parramatta, number 1. Number 2 was Mount Peter at 10.3. As I said before, Mount Peter is an area where a lot of the growth is happening in Cairns, like the new supply pipeline, a lot of first home buyers coming into this market, a lot of new supply available there as well. So a lot of investor activity as well as investor stock. So with that comes the ability for investors and renters or tenants to come into this marketplace and continue to push up and drive up the median rents. And I think that's certainly what's happened here over the last 12 months. Mount Peter, a lot of that new supply that's been coming on the area. Investors have bought them and then now renting at a premium, and that median rent is starting to push up over time. And look, Mount Peter, the median house price, still around that sort of mid to high 500s. So with this as the average median rental of about 620 right now, you're probably getting sort of a 5.5% yield or close to a 6% yield they're buying in that market. So it's still a good option if you plan to invest for high cash flow or higher yields, because Mount Peter offers that at that lower price point and still higher rents. But in terms of it as an investment area, I won't speak to that too much, but it does have quite poor fundamentals because it is surrounded by a whole bunch of vacant land, I suppose, where a lot of that new supply pipeline is being built out. So it could certainly be an issue over time, that supply pipeline really withholding growth. They say new supply is the enemy of capital growth. So if you're clustered amongst an area where there's a whole body of new supply in the pipeline, that could really stop your property from performing over the long term, because there's just so much increased competition. You more or less want to be in areas where there is a lot of scarcity. But look, Mount Peter, good to see it up on the list, and I think, still I believe it's got plenty of wiggle room to keep pushing up. And over the last 10 years, you've done 51%, over the last 5 years, 40%, and 21% over the last 3 years. Palm Cove is on this list, another blue chip area. Look, there's not a lot of rental stock available in Palm Cove, but properties that do go up for rent there get snapped up pretty fast, and you can see here that it's one of the more expensive areas to rent at a median of $740 per week. But there'd be properties within Palm Cove that are renting upwards of $1,000 a week, particularly your executive sort of villas and your executive style homes, or the ocean view properties as well, really renting at a premium. But look, I don't really need to say too much about Palm Cove. It is a blue chip area with very limited rental stock, and anything that does come online in that marketplace is always snapped up very quickly, and it does cater for that more discerning sort of renter, high-level executives, well-established families that have the ability to pay upwards of $1,000 a week rent. So I think that median will certainly be pushing up over the next couple of years as well. And if you backdate the performance of Palm Cove, 57%, 38%, and 23% respectively over the last sort of 3, 5, and 10-year period. Gordervale, good to see Gordervale on the list. It's almost like its own little town outside of Cairns. And look, it's been basically one of those markets that have been just super quiet over the last sort of 10, 15 years, and it's now just really starting to find itself and really positioning itself as a really good place to not only rent but also to live now, as a lot of first home buyers are moving into Gordervale. A lot of people with the lower budgets are going into Gordervale, and if you look at a lot of the public infrastructure that's been built over the last 10 years, it's basically allowed people to commute from Gordervale into the CBD in the best part of 20 to 30 minutes now, whereas previously it would take anywhere between sort of 45 minutes to 50 minutes, but now you can get into the CBD relatively fast. So it's really opened up this Gordervale area or market to renters as well as home buyers now, and it's good to see Gordervale on the list, and it's grown by 8.8% in the last 12 months, 30% over the last 3 years, 44% over the last 5 years, and 60% over the last 10 years. And look, at $441 per week, I know a lot of the 4 bedrooms, 2 bathroom properties on 800 or 600 square meters around that pyramid estate or the newer area of Gordervale. Majority of those properties are now renting for like minimum of 600 a week, and I think that median of Gordervale at 541 has been slightly dragged down by a lot of the older established cottages around sort of the town centre of Gordervale. They tend to not rent as much as the more newer properties in the newer part of Gordervale. They're renting for around that $450 to $500 a week. The newer 4-bedroom, 2-bathroom houses, 10, 15-year-old properties in that pyramid estate area are renting for upwards of $600 a week minimum. But look, if you are investing, I think this is an area where you will get really good cash flow. Definitely, I think you can basically get positively geared property there or neutrally geared property in Gordonvale. But again, similar to Mount Peter, doesn't have the greatest of fundamentals. You're still a pretty fair way out of town itself. If I were to be buying in Gordonvale, I'd be looking at those older established areas where the bigger blocks are in the town centre area, 1,000 square metre plus blocks. I think on those older Queenslanders or cottages, I think you can get them now for around that sort of 450 price point. And I think if you have a renovation or value add strategy or development strategy, I think that's the upside you could get in Gordonvale as opposed to a buy and hold investment, I believe. Kawara Beach now what $631 per week, and it's grown by 8.4% over the last 12 months, and it's coming in at number 5 on that list. Look, there's not a whole bunch of rental stock in Kawara Beach, similarly to Palm Cove. So anything that does become available there gets snapped up very fast. And it is still very much an affordable rental market too, because you also have a lot of the upper middle class mainly renting in Kawara Beach as well. The upper middle class, I think, can continue to, I suppose, afford rents upwards of around that $800 per week. So I think Kawara Beach still has plenty of wiggle room going forward. There's also a big supply pipeline in Kawara Beach as well. That Paradise Palms Resort is being redeveloped at the moment. There's about 100 or 150 or so new properties going in there and being built at the moment. I'm not too sure how many of those are investor or rental stock, so just be mindful if you intend on potentially investing in places like Kawara Beach, is looking at the supply pipeline and just figuring out what sort of stock that's going to be. I think it's a lot of owner-occupier stock, given the scarcity of the area. I think a lot of people are buying those houses, those blocks of land, building their dream homes to live in. I'm not entirely sure how many investors are buying in there, but that's something to keep an eye on if you are buying in Kawara Beach, because if that whole new estate becomes oversaturated with investor stock or investment properties, that means there's going to create a bit of a spike in that vacancy rate. It's going to increase the amount of supply in the rental market, and obviously that increased supply could really drag down that overall median rent in that suburb. Smithfield, $608 per week, 8.1%. It's done really well. Similar to Kawara Beach, has a bunch of new supply in the pipeline as well, but a lot of the new properties in Smithfield tend to be renting at a premium as well, around that sort of what's that suburb called? Not suburb, sorry, Pocket Canopy's Edge. There's a couple of executive style homes there that rent upwards of around that $900 to $1,000 a week, and there's that newer area of Smithfield towards on the left or right side of the Captain Cook Highway. That newer area, majority of those homes are between 10 to 15 years old, and they're generally 4-bedroom, 2-bathroom homes. Some are on 450 square metre blocks, some are on 600 square metres a block, or blocks are slightly larger, and they tend to be renting very strongly as well, upwards of around that $600 per week. But it is a market as well, similar to Mount Peter and Parramatta Park. Median house price, you're looking at around that $650. So to get a positive cash flow property in the suburb might be very hard to get. You're probably looking more or less negatively geared or around that neutrally geared mark, with that median house price around that $650 per week. Bayview Heights, good to see Bayview Heights on this list. I think it's a suburb with a lot of potential for not only rental growth but capital growth. I think it's just a pocket of Cairns that has that desirability and appeal to really explode, I think, over the next decade. But it's basically grown by 8.1% and done really well, and it's still very affordable as well, around that sort of $574 per week relative to the demographic that lives there. Bayview Heights is kind of gentrifying now, but predominantly it's been sort of upper middle class. But I think more and more upper middle class people are moving into that suburb now, and I think it's really putting upward pressure on house prices, and will continue to put upward pressure on house prices over the next decade. But it's also putting now upwards pressure on rents as well. But it's also an area not like Smithfield, not like Kawara Beach, not like Mount Peter. It's an area that's completely established, so there's not any new stock there that can come in and threaten the the viability or future pipeline of your property, because there's no new land to build new stock. So what's there is there now, and there's only a small pool of rental properties on the market there at any given time. So with no new supply ever coming onto the market. So I think from a rental point of view, that's a really good sort of imbalance to have, where you're always going to have a capped supply and sort of strong demand, and I think that's going to put that upwards pressure on rents and also upwards pressure on house prices as well. So that's why I really like Bayview Heights. Caravonica, good to see Caravonica on the list, but it's one of those suburbs that was highly impacted from Cyclone Jasper. A large portion of Caravonica was inundated by the flood events at the time, and I think going forward, it might for the 2024 period, 2025 period, I think the rental growth in the suburb will really slow down. But it's good to see Caravonica on the list nonetheless. But if you can buy investment properties out of the areas that weren't flood affected, I think Caravonica still has some really good bones and appeal there to do some pretty good things long term. But I think in the short term, I think Caravonica now has kind of been plagued or has lost its. The market has a bit of a distaste towards Caravonica now, given that it was one of those suburbs highly affected by Cyclone Jasper and the recent flood events. White Rock at 6.8%. I really like White Rock. I think there's a lot of rental growth in White Rock. White Rock's coming off a relatively low base as well, and it was one of your more affordable suburbs, blue collar families, not upper middle class, I'd probably say lower middle class. But what's actually happening in that area is a lot of the lower socioeconomic demographic that were there now renting and also living. I think majority of them have moved on, given that prices are pushed up now. So a lot of them have sold and capitalized on prices pushing up. But at the same time, people that were renting there on the lower socioeconomic end can't really afford to rent in White Rock anymore because the rents have become so expensive now. So I think it is really good, White Rock, because it has those really good fundamentals that I like. It's completely built out. It's not too far from the CBD. You're close to some really good schools, close to some shops, close to some big job hubs. So I think from a rental point of view, it's very well positioned there, and I think it can certainly push up, above that $600 price point per week over the next sort of 24 months. I wouldn't be surprised if it's actually one of the best performers going forward. And you can still buy property there sub 500,000 at the moment, and you can still buy really good 4-bedroom 2-bathroom properties sub 600,000. So you can get some positively geared property there and neutrally geared property there as well. So I think that's a really good investment hotspot, and I'm buying a lot of investments in there for clients at the moment. If I can get in those right streets and buy the right properties, those 4-bedroom 2-bathroom homes that'll appeal to the owner-occupier market, I think they're the ones with the best upside. So White Rock, really good, guys, and as I said, I think it can really push up to that $600 per week plus. Edmonton, very similar to Mount Peter, but what separates Mount Peter to Edmonton is that Edmonton has a lot of older established pockets. Mount Peter is an area that majority of the stock there has been built in the sort of the last 10-15 years, whereas the broader Edmonton suburb, you got properties there that as old as 60 years. So a lot of the older stock tends to rent more cheaply than a lot of the newer stock in Edmonton or a lot of the newer stock in Mount Peter. So that really drags down that median rent. But again, I think because it's so affordable, a lot of families want to push into the south corridor to get on these cheaper areas or get on these properties with cheaper rents. And I think given that it's so cheap, it has a lot of wiggle room again to push up to that sort of $600 per week, because the demographic is slightly similar to Mount Peter. Because there's still a lot of blue-collar families around Edmonton, lower socioeconomic families around Edmonton. So I think that median rent will grow, but I don't think it'll grow at the same rate as Mount Peter or Gordonvale. I think it'll grow, but it'll grow at a much slower rate than those suburbs. But I definitely think it can push up to that $600 per week over the next couple of years. So that's a breakdown, guys, of the suburbs in Cairns with the highest median rental growth over the last 12 months.